Ever wondered how banks operate? Today, we unravel this mystery. Imagine a world without banks. It would be like a city without roads, a body without veins. Banks are the lifeblood of our economy, facilitating the flow of money, much like veins do with blood. They serve as a trusted middleman for transactions, allowing us to buy, sell, save, borrow, and invest. Now, let's say you want to buy a bicycle, but you don't have enough money. You go to a bank and they lend you the amount, which you promise to pay back with a little extra. This extra is known as interest, and it's one of the ways banks earn money. Banks also provide a safe haven for our hard-earned cash. Instead of stashing it under the mattress, we deposit it in a bank. They guard it, and in return, they use our deposits to fund loans for others. So, banks are much more than just buildings with vaults. They are vital cogs in the economy's wheel. Now, how does a bank create money? Sounds magical, right? Well, it's less about magic and more about a clever system. Think of it like this. When you deposit your money into a bank, the bank doesn't just sit on it. No, it puts your money to work. Here's how it happens. Say you deposit $100. The bank keeps a small fraction, let's say $10, as reserve. The remaining $90, the bank loans it out. But here's the twist. The person who borrows those $90 might deposit it in their bank, which then loans out a fraction of that deposit, and so on. This cycle creates more money in the economy than the initial $100. And this, dear listeners, is the magic of money creation. Banks essentially multiply the money in our economy by lending and relending the same money over and over again. Just like a magician pulling a rabbit out of a hat, banks create money out of thin air. What if the bank fails? Is your money safe? These are important questions that deserve clear answers. Well, in the banking system, there are safety nets in place to protect your hard-earned money. These safety nets come in the form of insurance and regulatory bodies. So, what do these bodies do? Picture insurance entities as superheroes, swooping in to cover losses if, heaven forbid, a bank fails. They protect a certain amount of your deposit, so even in the worst-case scenario, you won't lose everything. Then, there are the regulatory bodies. Think of them as the referees of the banking game, setting the rules and making sure everyone plays fair. They supervise banks, implement regulations, and work tirelessly to prevent bank failures. Their ultimate goal? To protect you, the depositor, and ensure the stability of our financial system. So rest easy knowing your money is protected, even if the bank fails.